Welcome back. You're tuned into Bazaar Morning Call. Well, let's focus on Dr. Reddy's, who's the first management on the show. It reported actually a mixed set of numbers in the first quarter. The revenue came in at a healthy number, but the margins contracted marginally. We're now joined by Erez Israeli, the CEO at Dr. Reddy's Labs. Hi, sir. Good morning. Thanks a lot for joining in. Well, the US sales number declined by 11% on a year-on-year basis. Could you help us out with how much did Revlimid generic contribute in the past quarter? And how much competition did it see?
It's not so much about the competition. Each one of the company has a certain quota and certain timing in which the customers are buying it. This quarter, we had less of this product, and also the price is less. It's part of a normal anticipated situation for this product, as this is obviously the last year of the contract.
Got that. So what is your guidance on US sales for the next 3 quarters?
No, they will be normalized. Obviously, the linadulemide will be wind down. So we have basically next quarter and a little bit of the quarter after. And that's no more after that within the current framework. And as for the rest of the product, we see that as a normal course of business with the launches. So it's supposed to be around flat to mid-single digit growth like it normally does on the normal business, at least in America.
You've also said that margins after Revlimid generic would be 25%. What is that predicated on? And what are some of the key launches? What's your pipeline looking like that could perhaps support margins?
We are having 4 levers of growth that also affecting margins. First, the base market, everything that is not semaglutide or abatacept or linadulemide, this is growing in double digit, including the US that I mentioned. So even if the US is flat, the overall business, which is more than 30,000 CR, is growing in double digit. Second, we are going to launch semaglutide in the last quarter of this fiscal, and abatacept in the year after. In addition to that, there is a certain adjustment. We naturally use the time that we have linadulemide in order to invest into the future. We timed some of this investment in a way that we will not have them after that. So you'll see some of the investment in the future, like R&D and some of the other costs going down accordingly. So overall, we are planning to maintain the overall profitability as well as the growth. So the double-digit growth and the profitability are meant to continue also into the future.
Well, Mr. Israeli, the company guided for double-digit top-line growth at FY26 and flat margins. Now, some analysts think this guidance is a tough ask. According to you, is it a challenge? Does the guidance still hold?
You know very
well. And for the remainder of this year, what's it looking like?
You know very well we are not guiding. So whoever guided this is our analysts that believe that this is what we are going to do. What we are saying is obviously the profit that will come from the current arrangement of linadulemide will go away. And it will wind down through the year. The company will do a double-digit growth. What will be the profit is very much determined how much potentially semaglutide will be able to sell in the end of the year.
Got that. Just a sort of a quick sense on, these are estimates, of course, projections, right? Now, there are street estimates which say that you could make up to $280 million in FY27 from semaglutide, from key markets such as Canada, etc. Is that estimate close to your internal estimate? Could you give us a sense?
It can be a very big product. It can be more than that even. Of course, it can be less than that. It's very much it's very much depends on one, the ability to get the approvals day one for each one of the market, which what we are planning to do. And second, of course, of how many competitors will be in each one of the market, which will obviously determine the price. So the numbers that you're mentioning is considering certain scenarios, which can be reasonable, but obviously we are preparing for other scenarios as well.
Mr. Israeli, what is your expectation from Mr. Trump when it comes to tariffs, any kind of roadblocks with respect to your exports to the US?
I wish I knew. We are obviously looking forward to the news. The pharmaceutical sector, especially in India, which is affecting most of what we are doing, is it will be either be affected by a potential agreement between India and the United States, if this agreement will be, or it will be part of the solution of Section 232, which is more of a sectorial segment that right now it's under some sort of examination by the US government. So we don't know if we'll be impacted by the sector or by the country. Naturally, whatever will come, we'll have to address it. And what we hope, that it will create advantage for India over maybe other companies from other countries, and even create an opportunity to increase market share.
Oh, yes, absolutely. I mean, in hope we trust, but in the interim, there also has to be a game plan. So let me ask you this. I mean, are you, having said what you've said, are you still considering onshoring, setting up plants in the US to mitigate any potential risk?
We are not planning onshoring. We are not against making in the United States, but we are not doing it because of onshoring. It's only if it makes sense from economy point of view, from a customer segmentation point of view to make United States. We used to have a plant in the United States. We still have one plant in the United States. As we speak, there are no onshoring activities.
All right, so no onshoring, but confident on the business overall. Got it, Mr. Israeli. Thanks very much for joining in. Good to get that perspective with you on the business and the year ahead. Well,